Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education, more specifically Forex swing trading, using the TC2000 platform. Hello, this is the Forex Week in Review on the 19th of March at 4 p.m. Central Time. And I'm going to go ahead and start with the Aussie dollar, Canadian dollar. As you can see here, it was a pretty choppy week here. We're close to the 200 moving day average. We had an initial setup on Sunday, a 1-2, and then we were out on this candle. I did not take this because we were right at support at the 200 moving day average, and it was a good thing I didn't. It came back, and this was the initial candle, and this, believe it or not, with the Heikin-Ashi is green above the RL10. This was a long, and we ended the week with a small gain for Aussie dollar, Canadian dollar. So first initial loss here, second gain here. Aussie dollar, Swiss franc. Again, a lot of consolidation and confusion here. This looked like a potential catapult here for a long, especially with these two long candles, and this went in on Sunday for 1-2-3 punch out. Came back. The Heikin-Ashi was not above the RL10 with this. This came back down below the RL10, so no further trade for the rest of the week. So this kept us out of this chop here. The 1-2 punch kept us out of the chop here at the end of the week. Aussie dollar, Japanese yen. Well, the initial order here and a loss, no further trade for the rest of the week. See, again, below the RL10, Heikin-Ashi body, keep us out of any type of consolidation here for trading here, the Forex currencies. Aussie dollar, New Zealand dollar. We did, initial trade was not indicated here. We had a green Heikin-Ashi body above the RL10. This was an initial trade here with, I put, because the body was below, the Heikin-Ashi body was below the RL10. It's kind of hard to determine that until the candle prints. And then with the stop at the height of this candle, so we put an order here, came back, stopped me out. Another Heikin-Ashi body here, and if you took that trade, you were stopped out at the high of that particular candle too as well. And then a very small 1-2-3 punch out, to end of the week. Aussie dollar, US dollar, again, very choppy week here, no trade. Initial trade here at the height of this candle. This is stopped out. I was kept out of this particular chop here. This is an extreme moves, and so we didn't, based on the rules, we don't partake in this kind of activity here, right? So this is consolidation. This is a head fake that would normally keep a lot of people in, get them all excited. Now, if you did take this, for example, because you didn't know if the body is actually below the RL10, you could have had target here at the RL270 because you're right up against the RL90. This, again, another potential catapult here that could have happened. But what we're seeing is a upside down head and shoulders formation here that could reverse back up towards the RL270. But no further trade for the rest of the week. Canadian dollar, Swiss franc. Initial order here for a short at the height. Stop here at the height. Was immediately stopped out for a small loss, and no further trade for the rest of the week. Green Heikin-Ashi bodies below the RL10. Week long, just kind of toppy here. And interesting short here. The only trade for the week was this long, and it stopped out right here at this morning star, this doji here, right? This is pretty incredible. No actual gain or just a scratch for the week. So if it goes below this, we could see further price action to the downside. If it goes above, then we could see definitely a bullish sign to go up for the week. Swiss franc, Japanese yen. Note, we did have a 1, 2, and 3 punch out for a strange thing, but if you had your target here at the RL270, this would have been a good trade here. Got toppy here at the RL270 with these haramis. Then came back, initial trade here for a 1-2 out for Swiss franc, Japanese yen. Sunday we had an initial trade here. We were stopped out. If you did take this trade and you had your stop below, this candle would have been out for a small 2 as well. We had inverted wedge wedge starting to form here. If you took this short, immediately came back and was out on this day. So you have 3 losses for Euro Aussie dollar at this consolidation zone here. Week overall for the euro pairs here were to the downside. Yeah, no trade here. Red candle above the RL10. Next candle for a nice 1, 2, 3. Got an initial gain here. Punch out. Nice good gain overall. No trade here. We have a red doji with a green candle. If you did take us with the 2 candle rule, you would have had a small loss here to end the week. So nice gain and a minimal loss there. So you had those two difference of those 2 candles, the overall gain for the week. Euro Swiss franc, no trade here. That's a good thing. Came back and initial short here, another short here, and then I was out at the middle for a break-even trade. And this a harami with a red can or a doji here, or red green candle doji. That's right around there. I didn't take this trade to the long side, even though the harami was above the RL10. So this was just a discretionary stay out of the market type of move here for me. But you could have took this for a 1-2 punch out on Friday. Initial trade here for a loss on the euro to close the week. And on Sunday had a trade here with a loss because it came back, stopped me out because it was a reverse candle color here. Another trade here with a loss to end that day, and I didn't take this long here because of the fact that the price action was below the RL10. So we had 3 losses for euro British pound. Pretty brutal there, consolidation there. Another reverse wedge. These reverse wedges show a lot of uncertainty in the markets right now. Euro Japanese had an initial short here, was out for a loss. Green Heikin-Ashi green candle, no trade. Took this trade and was out for a 1-2 on Friday. Euro New Zealand dollar, initial trade here was out at the height of the candle. Had a 2 candle rule, was in on this trade. However, it took me out on the stop here at the height of the candle. Again, another reverse wedge. One of the rare but very distinct consolidation patterns there that will just chop up traders that trying to go into one direction or trend trading or momentum trading in another direction. And no further trade for the rest of the week. Again, more consolidation at the 200 moving day average. Initial trade here, out for a loss, came back up, no trade. Green Heikin-Ashi below the RL10, below the RL10, no trade for the rest of the week. British pound, probably the most frustrating of the trades that we had here. Another reverse wedge formation. On Monday was initial trade there, out because it closed above the 200 moving day average. Another long here, but I had my stop here at the RL10, came back, stopped me out here for that. All of it in the short direction, but kept hugging the 200 moving day average. British pound Canadian dollar, initial trade here for once I saw this hammer though, I put my stop here at the height of the candle and was immediately stopped out for a small loss on the 200. This trade I took, and because it was above there, I had a target of the RL270, came back for a loss on Friday. Again, a lot of consolidation here, and this is just the big banks stop hunting your orders. So just make sure to be careful when trading consolidation areas here at major moving averages. British pound Swiss franc, had initial trade here. I did have the RL90 up there, so I moved my stop here to the low of the belly of the dragon in for a gain. If you stayed in it, there was a hammer here, and then anything above a hammer signifies a reversal in direction, right? So you have to be careful of trading these kind of patterns here. If it goes below the hammer, then it's continued momentum to the downside. But we got summer and fall. This could be another emerging dragon. We'll have to see. But we had initial trade here, and I was out for a loss at the RL10 here. So this is where my stop was. Again, this is kind of a weak reversal, but usually these equal. When you got a hammer, you got a falling candle here, and then you got a hammer, and then you got a reversal. This shows some consolidation and indecision within the markets on this reversal. So Monday, no trade on Sunday. Monday, initial loss here, another hammer. So I was out on this trade even though, or if you put in another order here with the stop here at the height of the candle, you could have done that. Would have been stopped out, came back, then initial shooting star come back the other direction, but it was a green Heikin-Ashi, so no trade. British pound, New Zealand dollar. Sunday, first order, had my target at the 200, hit it. Heikin-Ashi body was right at the 200. You could have not taken that or taken it. If you did take it, you're out for a loss if you had your stop here at the belly dragon or the RL10. If you had your target at the 30, would have hit it, and potential stop here at the RL90 or the 200. This came back like a rocket, and this is an exceptionally long candle with a lot of risk. However, it did close above the 200 moving day average. If you did take this trade. However, I did have the stop here based on the consolidation here, at least one indicator away, which was at the edge of the river. Came back, stopped me out to end the week. British pound, US dollar. Again, and more consolidation and chop. We have the RL270 here. That is there. Well, I took this order on a short, came back all the way down. If you didn't move your stop to break even at this point, it would have shot back up and you could have been out on this trade. Now, since the Heikin-Ashi body is below the RL10, you can put another order in with the stop there. If you did for those two orders, you would have been out for loss on both orders. This came back as kind of a reversal, but stopped right at the 270. Heikin-Ashi body was below. Did not take it. This was red, green, no trade for the rest of the week. New Zealand Canadian dollar just hovered. Just hovered right along the 200. So this was nothing but chop. No trade here. Trade green Harami. Initial trade here, thinking it was going down, came back, stopped me out immediately. And then what we have here showing Heikin-Ashi bodies above the RL10 is a kind of a weak short. So we have to be careful when trading this. We have to wait for the currencies to start picking a direction like it did here. This was to the downside, and what we do is once they pick a downside or pick a direction, this is the RL270, then we go in and do our trade. New Zealand Swiss franc, more chop here. Very tough trading week. Green Heikin-Ashi body, no trade. Green Heikin-Ashi body, downward candle, no trade. Initial trade here, won, and was out at the height of the candle. Came back, stopped me out. Red Heikin-Ashi body below the RL10. Again, reverse wedge. This will just chop up all retail traders in terms of trading. This is no trend. This is nothing but consolidation. And when you start the dragon getting all chopped up here like this just means that there's a lot of indecision in the market. New Zealand Japanese yen, same thing. I did not take this trade here with the green Heikin-Ashi, even though this was based on the week's trades, it started to show that there was a lot of chop and action. And this is a doji. You can't tell if it's green or red. Best just not to trade that. This was below the RL10. Went in for a trade and very small gain on Friday to close up with a 1-2. New Zealand US dollar, same thing. Close out the week with a scratch. Initial Sunday was small loss. Then had two red candles south the RL10 with a stop there. Came back, stopped me out. Had the RL90 push back here. You could have been in that trade if you took this trade. I did not. But if you did take this trade and you had your target at the RL90, you would have been in for a nice gain there with that particular trade. Candle was, the Heikin-Ashi body was above the RL10. So this would have been a nice quick gain for New Zealand US dollar before closing out the week. US dollar, Canadian dollar. This was from the previous week, so there was no trade. No trade. All Heikin-Ashi red above the RL10. This was a red Heikin-Ashi with a green candle right at the RL270. Did not take this trade, so no trade for US dollar, Canadian dollar. US dollar, Swiss franc. Green Heikin-Ashi below. It was a morning star, so I didn't take it. And then it was two red candles south of the RL10. Took this trade for a 1-2-3 punch out, and then continue to go further down. I did. This was out at this particular candle, which is fine, but no long here for a 1-2 because of red Heikin-Ashi. Overall price action for the week is to the upside, though. We just need to be concerned. This is standard definition consolidation here. No trade. all green candles south of the RL10. First initial candle, second initial candle with a scratch and no further trade for the rest of the week. Look at this, just doji. You know, no direction, total indecision for US dollar, Japanese yen. Silver showed the same thing, complete indecision on the metals or precious metals. Same thing with gold, just kind of hung out before picking a particular direction, but did end up for the week there, which may show what we have here is an RLXD. So we have regression line crossing with the regression line 30, and so this may be picking up steam to go up there, which would show potential inflationary type of signals to the market, right? If gold rises in price, it is because of potential inflationary pressures. So we have to be careful of this. This is an RLXD, and it's getting ready to gain steam before it goes in one direction. Now, this could potentially be a collapsing dragon. So if we go from winter to spring back to winter, then it is a collapsing dragon. And so that if this does collapse and the dragon, both the high and the low, go below this, then this could show potential for further reduction in price in gold. But this right now is currently showing strength. So if this continues to go up, and then we got a spring and a summer, then gold is going to go up, and inflation is going to kind of signal that inflation is going to rise. Well, folks, that's all I have for the speed run and the weekend review. We're currently conducting a Forex boot camp and a Forex intermediate course. If you're interested, click on the link below. And remember, ruthless risk management. Happy trading, everyone. Have a great weekend. I'll see you on Sunday.
Well, if you like this video, go ahead and hit the like button below and the subscribe button. And if you want more information on TC2000, I have an affiliate link below. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.